On the top three things this morning, number one is China, number two is the euro, and number three is the price of oil. So first on China, they had the rate cut, they had the rumor of the rate cut, they had the rate cut after the rumor, and the stock market went down. So Shanghai Composite down 1.2% overnight. That's down down 7 of the last 8 trading days, and that puts Chinese stocks down 3% for the year to date, and also bearish on our trend indicator, which is interesting, new, and again in line with the economic data, even though December, you'll recall, the Chinese stock market was up 21% on equally bad economic data. So again, if you've had a great time risk managing that, congratulations. I myself find it quite difficult. Point number two is euro. Euro banging the top end of the risk range this morning of 114 versus the dollar. Again, the current risk range is 111 to 114. Now this is very interesting ahead of what, again, the jobs report tomorrow. You had a challenger jobs numbers this morning that came out as a miss. You had the ADP number as a miss. You've had jobless claims, which we put up as the chart of the day, rising. Again, jobless claims rising off their cycle lows. So again, there's a lot of concern, at least here at Hedgeye, into this jobs report tomorrow. So we'll have to see if the bond market cares again tomorrow on that. That, of course, would be very bullish for bonds on the long end of the curve. And again, long bonds have no downside support on the 10-year to 1.65%. Finally, on oil, we traded this one pretty well, at least in signal terms. And again, I'm not allowed to trade real money, or I'd have a huge conflict of interest, which is, of course, what you do not want, is me front-running you and or anyone else that we do business with. But again, with oil, on the bounce, we signaled the sell sign as the dollar was oversold. Then we got the correction, a big correction yesterday on the order of 8%. So we sent out the cover signal. And again, if I didn't have these concerns about the jobs report, I wouldn't have sent out the cover signal, because again, there is a lot of downside in the risk range. The current risk range for WTI is 42.24 to 51.97. But again, jobs report could be bad for the dollar, which in turn would be bullish for oil for a trade. So again, we'll see about that. And those are your top three things.